Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks fall the most in the month after China's latest fiscal plan underwhelms investors. Bitcoin tops $80,000 for the first time on optimism about a crypto-friendly White House. Germany's Chancellor opens the door to a confidence vote before Christmas, potentially bringing forward an early election to February. Plus, the Washington Post says Donald Trump has warned Russia's Vladimir Putin against escalating the war in Ukraine. We will bring you the latest. Happy Monday, everyone. We are looking at the futures session for European stocks, currently pointing up by 0.4% after ending last week in negative territory. Will the prospects be brighter this week for European stocks? We have earnings coming through, and then, of course, inflation data out of the Eurozone. We continue to keep across Fed speak as well through this week. FTSE 100 futures looking to add 0.3%. That's despite the fact that iron ore is under pressure, and that could put some pressure on the miners listed here in the UK. S&P futures looking to build on fresh records on Friday, looking to add 0.2%. Nasdaq futures pointing higher by 59 points. Let's flip the board and look cross asset. No treasuries trading today. It is, of course, Veterans Day in the US, though you will have the equity session in full in the States. Euro dollar currently at 107. We continue to monitor and pass the politics of Germany, of course. $73 a barrel on Brent, currently down 0.4%. Iron ore, again, linked to the lack of additional stimulus coming through from China, or at least some disappointment from some as to the fiscal support that's come through. There has been more support, but disappointing some at least. Iron ore currently closing in on 100 per tonne, down 2.4% in the session. And Bitcoin, it did get to that 81,000 level, just shy of that right now on the Trump trade and enthusiasm about the incoming president as potential regulatory response to the crypto space, currently up 1% in the session. Let's cross over right now to Singapore. Avril Hong standing by for a check of the Asian markets with an eye on Japan and an eye as well on the China story. Avril.
Yeah, China and Japan. Now, we are seeing Asia's stock gauge off by the most in about a month initially, but they are pairing those declines, and that's something we're seeing on the Hang Seng and Hang Seng Tech as well. You get the sense that traders are maybe looking past the initial disappointment from China's NPC readout, maybe looking ahead to earnings later in the week from the Chinese tech names, including Tencent, Alibaba, JD.com. They're expected to show the growth coming through for the quarterly revenues. They are supposed to show that that is being sustained. So the Hang Seng Tech, which lost about 3% earlier, actually pairing those declines. Now, let's take a closer look at what we're seeing in the FX space, because as you see there, the Nikkei isn't faring as badly as what we're seeing in the rest of the region. We can flip the board and take a closer look at the currencies. The yen is weaker, and this is a lot to do with the Japanese political backdrop that's prompting people to speculate that the BOJ is going to be hesitating on rate hikes. Indeed, the BOJ summary of opinion from the October meeting seems to cement that idea. China's currency also in focus here. We are seeing it hovering near the 719, 720 level. But what you need to know is via the recent fixes on the yuan, the PBOC seems to be a bit more tolerant with the Chinese currency weakness, maybe in preparation for Trump's tariffs. Let's flip the board again and take a look at what we're seeing. This chart courtesy of MLive's Mary Nicola, which will show you how the US-China yield differentials in this line in blue have actually been climbing. Given everything that's coming out of the US, the expectation is that yields in the US are going to remain elevated. That could mean dollar China faces further upward pressure, and some see 730 by the end of this year, Tom.
OK, Avril Hong with a check on the Asian markets for us this Monday. Thank you very much indeed. To the China story in more detail right now. Stocks, as Avril was pointing out, have slipped after new support measures disappointed investors hoping for more powerful fiscal stimulus. Bloomberg's James Mager, who followed all of this very closely for us at a granular level, joins us for the details. James, thanks for joining us. Talk us through what we've heard from the NPC then, about 1.4 trillion US dollars. This is about alleviating the pressures at the local level when it comes to the debt pile. Will that translate into more local government spending to support the consumer?
In the long term, probably. In the short term, probably not. What they're talking about is being able to sell new bonds to pay back old bonds, to pay back old loans, to pay, and that to reduce the interest rates they have to pay on those older borrowings that they have. So, they can sell back all the bonds which are sold by these LGFVs, which are sort of quasi-government organizations who have to pay higher interest rates when they sell bonds. And then the government, the local government, the provinces, the cities can borrow at a cheaper rate. And so therefore they're reducing their interest rate payments. But, and there is going to be substantial, in the aggregate, there's going to be substantial gains across the country over the next 3 to 5 years. But, for the very, very poor, the very, very fiscally challenged parts of the country, this is not going to be an immediate boost to their finances. They're not going to suddenly have hundreds of millions of yuan extra that they can pay salaries they haven't paid, that they can pay for services that they've been, reneging on the cost of those for months or even longer now. So, this will help eventually, and this is going to help some of the more, especially the more indebted places around the country. But this isn't going to boost, this isn't going to lead to an immediate massive boost in spending by local governments across China. And so, the disappointment you're seeing is because I think, honestly, people were expecting much more from this, and people were hoping for much more. I think Moff had been very clear that they weren't going to do what people wanted. They weren't going to come out with massive increases in fiscal spending immediately, transfers to households, these kinds of things. And people were just hoping that what Moff was saying was wrong. Moff has come out last week, the NPC has come out last week and said, no, actually, we're doing what we said we were going to do, which is we're going to do a debt swap so local governments have more money. And then next year, you're going to see more changes to fiscal transfers. So the central government of Beijing, which gets most of the tax revenue, is going to be transferring more of that money to the provinces and local governments. But again, this is going to be helping them to pay for the things they're already meant to be paying for. This isn't going to lead to a massive increase in spending across China. So again, these are sort of fiscal policy measures that are going to have an effect at the margins and will help eventually over time. But you're talking about 3 years or 5 year time horizons for these things really sort of having a massive effect.
OK, James Maker, thank you very much indeed with the details from the National People's Congress and possibly a China that is keeping some response in its back pocket, leading up, of course, to the return of Trump to the White House, with UBS cutting its forecast on China's growth to about and around 4% next year as a result of those Trump risks. Talking of which, Donald Trump's upcoming return to the White House has significantly upended the outlook for US interest rates. Bloomberg's Valerie Teitel joins us now for a look at what is happening. Valerie, Treasuries closed today, of course, for Veterans Day holiday. So no trading of US Treasuries. What are the potential market catalysts this week then?
Tom, there are a fair few of them. Let me take you through them. The first is the amount of Fed speakers we have this week. Not just Jerome Powell on Thursday, but we also hear from the very influential Christopher Waller and the New York Fed President John Williams. Interesting to see that Jerome Powell speaking on Thursday. This comes after a Wall Street Journal report out this weekend saying that he is readying for a legal fight. And, Tom, he's even ready to pay it out of his own expenses if it comes to that, to defend his job legally. We also have a raft of U.S. data out this week. Tom, let's flip the board. We'll talk a little bit about that. We have CPI on Wednesday, PPI on Thursday. Interesting to note, Tom, that Powell is speaking after we get these two big data prints, so he could be asked questions on if this changes the outlook of the Federal Reserve. Rounds it out on Friday with retail sales, which is a key driver into the fourth quarter GDP, so eyes on that as well. The market is also going to be on tether hooks for any new Trump administration picks, one of which the U.S. Treasury Secretary has been highly talked about. The leader right now in the market's mind is Scott Bessent. He is the Key Square Capital CIO, known as a very market-friendly pick for the Trump administration. But note, he was out a few weeks ago saying that any notion that Trump's policies are inflationary is, quote, absurd. He sees them as quite deflationary instead. One thing that isn't waiting for more clarity is Bitcoin, though, Tom. This is known as the one of the Trump trades. It crossed 81,000 just earlier this morning. It's now trading just right below that 81,000 mark. It has surged 15% since the beginning of November.
OK, Bloomberg's Valerie Teitel, thank you very much indeed, with what to watch for this week and a check, of course, on crypto and Bitcoin, getting a further upside this morning on the back of expectations around Trump's policies. To Germany right now, German Chancellor Olaf Scholz says he is open to holding a parliamentary confidence vote before Christmas, potentially bringing the country's February election into play, or at least an early election forward to February, potentially. Let's get more and bring in Bloomberg's Oliver Crook, who, of course, stands by for us with the details. Where do things stand this Monday morning, Ollie?
Yeah, Tom, we're all sort of obsessed with these sort of mechanics of German politics, which we're going to learn a lot about over the next couple of weeks. But basically what needs to happen now in order for a federal election to take place is Olaf Scholz needs to call that no confidence vote himself before Parliament, which he will invariably lose, and then trigger that sort of federal election. He was trying to aim to do that in January, have the election in March. That, generally speaking, has not gone over particularly well politically, but also with the German population, which says that basically you need to do this a lot quicker. So he's opened the path to doing it potentially before Christmas. We could get the election before January. And that will clear up one of the sort of initial logistical challenges. The following question, though, Tom, is what government will actually be formed out of this? If you look at the polls right now as they stand, which I believe we have, you have the CDU under Merz doing the best out of any of the parties. But none of them, no two parties combined currently with the current polling can actually form a 50% plus government, right? And the closest you can get is CDU and the AfD, the far right, which basically every mainstream political party in Germany has refused to work with. Now, these polls could change as the days come because now, there's question of polling when there is not an actual election versus polling when there is an election. But currently, it is hard to see a path for a sort of coherent German government coming out of this election. And that will obviously change and potentially progress over the next couple of weeks, but it's not clear where that government gets formed.
Yeah, and arguably what you need right now is that coherent German government, particularly as we prepare for that Trump presidency, of course, for Germany, for Europe. And talk to us about the timing of all of this and the challenge on that front, Ollie.
Yeah, absolutely, Tom. I mean, listen, we talk about a political problem in Germany, but really at the heart of this political problem is an economic problem. It was a disagreement on how to resolve Germany's economic problems that really brought down this government. It was Olaf Scholz who was really trying to do away with the debt brake and try to really put into focus all of the intense spending that needs to happen in Germany in order for it to, A, deal with this sort of broader slowdown, but also getting this sort of economy moving into the sort of next stage, into the 21st century, if you will. And the FDP's and Christian Lindner's refusal to do that is what brought down the government. Now you have the situation, though, where you have a Trump election in the United States, where you have now, by the way, the U.S. is the biggest trading partner for Germany, a very export-dependent society. According to the research from IFO, if you do get those 10% tariffs from the United States, that could mean German exports would fall by 15% to the U.S. It would mean for the auto industry that the exports to the U.S. could fall by more than 30%. And if you have any sort of idea of what the sort of relationship might be with this German government and the Trump administration, Olaf Scholz have asked Donald Trump for a call as recently as early as Wednesday. He has still not got that call. Trump has talked to a lot of people. And if we're reading any tea leaves out of the administration, you look on Twitter, as we may be doing a bit more over the coming months, and we see Elon Musk writing, Olaf ist ein Narr, which means Olaf is a fool, from the sort of, so if that is the tea leaf that we're reading from the Trump administration, maybe not a favorable omen coming into this presidency.
Yeah, not the best signals there for the leadership of Germany. Still waiting for that phone call then. Bloomberg's Oliver Cook, thank you very much indeed on the latest when it comes to German politics and how that story is unfolding. Coming up, US President-elect Donald Trump. We're still talking about him, and we will be for the next 4 years in detail, you would suspect. Reportedly telling Russia's Vladimir Putin not to escalate the war in Ukraine. We're going to bring you the details on that front. That's coming up next. This is Bloomberg.
President Biden will have the opportunity over the next 70 days to make the case to the Congress and to the incoming administration that the United States should not walk away from Ukraine.
That was US National Security Advisor Jake Sullivan. Staying with that subject then, the Washington Post is reporting that Donald Trump told Vladimir Putin not to escalate the war in Ukraine, reminding him of the sizable US military presence in Europe. Let's bring in Bloomberg's opening trade anchor Kriti Gupta for the latest on this front then. What do we know around this reporting? What Putin and Trump have been discussing?
A sizable military presence around Europe, a lot of which is tied up in NATO assets, which we, of course, know has a tough relationship with President Trump. That being said, I think this is a really fascinating time because we knew these were promises being made on the campaign trail. We knew that President-elect Trump would have some sort of strategy to bring an end to the war in Ukraine. What we didn't know is how that would be accomplished. This phone call seems to be that first initial step. But remember, that doesn't mean things are sunshine and rainbows yet in terms of that relationship. And that's something that both Vladimir Putin and his spokesperson have both warned of, that things are friendlier than they might have been under a Biden administration. There are signs of positivity, but we are not quite there yet. And that's really where this phone call is so important. It's coming, by the way, on the heels of another phone call with President Vladimir Zelensky. So the Ukrainian officials are aware that this phone call is happening, at least according to Washington Post reporting as well. It's also crucial to remember that Elon Musk is a crucial part of these negotiations. So he was reported to be on that call with Vladimir Zelensky. He was not reported to be on the call with Vladimir Putin. That call happening in the Mar-a-Lago state of President Trump as well. So not even through official government channels or with the support of the State Department, for example, just directly to Donald Trump. I think what's crucial here and the big takeaway, especially when it comes to Elon Musk, has to be this issue of Starlink. Remember, a lot of that technology is being used in Ukraine for communication, especially against some of those Russian defenses and Russian offenses, I should say, as well. That's where you start to see Elon Musk have a very important role in terms of the many, many businesses that he has. We know, of course, he has Tesla. He has, of course, the Platform X, Starlink, and SpaceX, among many, many others.
Yeah, the interlinkages between Musk's business empire and his new role in politics, really fascinating. So the opening play here, potentially, in how Trump is thinking about dealing with the war in Ukraine. Meanwhile, we are having some details coming through in terms of what the Senate leadership looks like and some appointments as well coming through from President-elect Trump.
You know, the timing couldn't be more crucial here because, remember, you do need a Senate vote and you do need a congressional kind of majority here to pass any sort of debt ceilings, any sort of government shutdowns. We are getting another threat of one more government shutdown in December. There will be, of course, that debt ceiling story in January. So to have that unity, which, of course, the Republican Party has not shown in the last year or so when it comes to the Speaker of the House, for example, Mike Johnson getting a lot of attention. This is the Senate, however. There are a lot of names floating around. Rick Scott seems to be the major player or the major front runner that at least Elon Musk has endorsed on his Platform X. None of that has been endorsed by the Trump campaign, though. These are just some of the other names on your screen that are floating. But again, I don't want to get too much into nitty-gritty because anything could happen between now and that Senate appointments. What's crucial, though, and I think what the big takeaway here is that this is all happening, again, trying to put in place certain leaders in the administration without getting Senate approval. And that seems to be the theme in terms of the Trump campaign approach, simply because he hasn't taken office yet and he's already doing what feels like a lot of diplomatic business on international relations, but then also even domestically trying to push through some of these leaders. Some would argue it's for efficiency, it's for time at a very crucial time in geopolitics and domestic politics as well. Others would say it's bypassing the process.
OK, Chrissy Gupta, thank you very much indeed on the details coming through when it comes to the leadership of the Senate and some of those key appointments as well for the incoming Trump administration. Anchor on the opening trade. Now, US and Ukrainian officials sticking with that subject reportedly expect Russia to launch an offensive in the country's western Kursk region soon. The New York Times says Moscow has assembled a force of 50,000 soldiers, including North Korean troops, to try to reclaim territory seized by Ukraine. A US assessment also shows Russia has massed the force without having to pull soldiers out of Ukraine's east, allowing it to press on multiple fronts simultaneously. Qatar says it's stepping back from efforts to mediate a ceasefire between Israel and Hamas in Gaza. The Gulf state's Foreign Affairs Ministry says talks will resume when the two sides show, quote, willingness and seriousness to end the conflict. A source tells us Qatar decided it can no longer constructively contribute to the process without a genuine interest in a resolution. Coming up, world leaders gather in Baku for COP29. But could Trump's US election victory threaten a new climate finance deal? We will be live on the ground. This is Bloomberg. Welcome back. Happy Monday. Welcome back to Bloomberg Daybreak Europe. Now, the crucial debate at this year's COP29 summit is climate finance. And as world leaders gather in Baku in Azerbaijan just days after the re-election of Donald Trump, there is also the question, of course, of US commitment to the landmark Paris 2015 agreement. Let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jemana Pasechi, who's on the ground for us in Baku. Jemana, what is on the agenda for this COP? And to what extent does Trump loom large?
Yeah, well, let me start off with the first question, Tom. This COP isn't as big as COP28, which happened in Dubai last year, or the COP30 that's going to take place in Brazil. It is dubbed the Finance COP, and essentially what they're trying to do here is to pay particular focus on climate financing with one objective in mind. Back in 2015, a target called the New Collective Quantified Goal was set. That's the NCQG. They like their acronyms here. But what that meant is they set a target of $100 billion annually of aid to be provided from rich countries to developing countries to help with climate change effects and climate mitigation and adaptation. Now, that number is set to be revised higher, but the question is by how much? Agencies like the IEA estimate that as much as $1 trillion of aid is needed to be directed from rich countries to developing countries. So far, we've only met the 100 billion target once, and that was one time in 2022. So where that financing is going to come from is a big question. It obviously necessitates the help of multilateral institutions like World Bank alongside the support of the private sector. So you're going to hear a lot about blended finance, that sort of public-private sector cooperation. In addition, we're looking for further details on this loss and damage fund, similar concept, but here it's where some of the biggest fossil fuel polluters in the world compensate the countries that have been most hit by climate change effects. Again, it's still a work in progress, but was one of the big achievements of the prior COPs in the last 2 years. Furthermore, looking for more information on mechanisms like carbon pricing, the carbon border mechanism schemes, which are further details are expected to be supplied. But the thing about this COP is geopolitics are looming large as well. We still have wars raging in Europe. You've got the conflicts in the Middle East. You've got tension between US and China. And then throw into the mix the fact that President Donald Trump is returning to the White House, which of course could upend the direction of travel for many of these climate talks.
Yeah, indeed. Look, this is a crucial moment. We're missing targets left, right and centre. We are well off course, and trying to meet those 2015 targets that were set. It's being held in a petro state, let's face it, Azerbaijan. So there's that question as well. Talk to us about the Trump effect, because that $1 trillion number that you talk about, huge, and it sounds like the US is going to have very little play in funding this transition that is needed. Talk to us about how this is an overhang at this event.
Yeah, and the backdrop is just the last 4 years under the Biden administration, the U.S. has gained a lot of credibility with the passage of the Inflation Reduction Act. They've been pivotal in leading some of these climate discussions in front of the scenes and behind the scenes with all of the talks that take place. And so the return of Trump does loom large with conversations here. There's a lot of concern about what it could mean with U.S.'s leadership position. You will recall that one of the first actions that President Trump did in 2017 was to withdraw the U.S. from the 2015 Paris Agreement. There's even concern he could fully withdraw from the UN framework. And by the way, if he does that, it's almost impossible for the US to get back in again, because they'd need 2/3 approval from the Senate to get back into the UN framework. He's also talked about boosting fossil fuel production, removing tax cuts, subsidies for clean energy, for electric vehicles, for renewable energy. So that could actually lead to reversal of some of the emissions reductions that this whole conference has been vying for ever since its inception. And again, you mentioned it, many of these targets have been missed. The UN is warning that it's climate crunch time. The European Energy Agency just last week was reporting that this year is on track to be the warmest year on record. And indeed, we are seeing many of the effects of climate change, from the floods, the hurricanes that have hit the world this year. And this is a time for more leadership, not less leadership, and even countries around the world to come together to show a credible pathway to that net zero target in 2050. With the potential absence of U.S. leadership, a lot of questions will be thrown into doubt.
OK, great reporting, great context. Jemana Pasecci, of course, our anchor on the ground at COP29, who'll be across that event for us over the next few days. Jemana, thank you. Coming up, we're going to take a closer look at Trump's tariff plans and their impact on the US economy and on global trade. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks slide after China's latest fiscal plan underwhelms investors. Bitcoin topping $80,000 for the first time on optimism about a crypto-friendly White House. Germany's Chancellor opens the door to a confidence vote before Christmas, potentially bringing forward an early election to February. Plus, the Washington Post says Donald Trump has warned Russia's Vladimir Putin against escalating the war in Ukraine. We have earnings season as well, still unfolding here in Europe, and a redhead crossing the line when it comes to the tyre maker Continental lowering its full-year sales outlook to around 39.5 billion euros. That is well below the former estimates of 42 billion. So quite a significant downgrade in terms of the full-year sales outlook for Continental. This is a stock that's down about 23% year-to-date. There is a focus in terms of the details around volumes. Third quarter automotive revenue, a key unit for this company, coming in line with the estimates. Sales in the third quarter coming in softer as well, slightly below the estimates, but it's the downgrade to the full-year sales outlook that will be consequential to investors in this stock. So we'll bring you more details of that. We're going to be speaking, by the way, with the company's CFO. That's at 8:45 a.m. UK time on the opening trade, so 45 minutes after that stock will have started trading. So tune in for that interview. We're still waiting for earnings coming through from the insurer, Hanover Re. In fact, those lines have come through. They have raised their profit target for 2024. So it's a very different story for the insurer versus the autos part maker. Hanover Re raising its profit target for 2024. Let's get back to these markets, though, and the macro picture is this. S&P market, so the S&P 500, closing into that 6,000 level. Futures here in Europe pointing higher by 0.5% after European stocks ended in negative territory last week. The FTSE 100 also looking to add 35 points so far at this stage. As I mentioned, S&P futures looking to build above that 6,000 level after a fresh record high on Friday, looking up by 0.2% so far in the session. Nasdaq futures looking to add 58 points, up 0.3%. It's a Veterans Day in the US, so no trading of treasuries, but the stock markets will be open. Cross asset then, euro dollar at 107. The politics of Germany, of course, we continue to get details on that front. Brent trading at $74 per barrel, just up 0.1% in the session. Pressure coming through from iron ore, and this is partly linked to some investor disappointment around the fiscal stimulus and response out of China, currently down 1.8%. So we watch the miners at the open, and there's Bitcoin back above 81,000, up 1.6% in the session on expectations that Trump and the new administration will be more friendly to the crypto space. Staying on Trump and the impact on global trade, former World Trade Organization chief Pascal Lamy says President-elect Trump should see America's trade deficit as an advantage rather than a weakness because of the power of the US dollar. He spoke with our chief North Asia correspondent Stephen Engel at the China-Europe International Business School in Shanghai.
What Mr. Trump has said he would do if he was elected was a big step forward in the direction of a more protectionist U.S. Now, you're absolutely right. Given the importance of the U.S. economy for the world, this will be a big problem for the 80% of the world economy which is not the U.S. No doubt about that.
US President-elect Donald Trump has vowed to impose massive tariffs, eyeing a duty of 20% on all foreign goods and 60% or more on goods coming from China. For analysis, let's bring in Aline Doussin, partner at global law firm Hogan Lovells. Aline, thank you for joining us in the studio this morning. Look, there are expectations that maybe part of this is down to leverage play from President-elect Trump. He wants to put pressure on trading partners of the US, but there is a broad expectation that tariffs will increase. With the focus on Europe, what is the resilience in the Eurozone to higher tariffs from a US administration?
Thank you for having me. I feel we'll have to wait and see exactly the form and shape those tariff measures will take. I think it's very early stage at the moment. We've heard a lot over the campaign trail and imposing sort of a potentially a wide way of tariff measures, right? You mentioned sort of 20% across the board that will apply to all U.S. trading partners with potentially a specific focus on China and Mexico, but also potentially on specific type of categories of products, vehicles being one of them. So in terms of the impact that and the response potentially that those will have on the EU and the UK, I think it's worth going back to what we saw in the context of the previous Trump administration, where we saw those tariffs being imposed, well, threatened, but also being imposed. And at that time, the EU sort of looked at a retaliatory list of products that could potentially be adopted in response to those unilateral action. So ultimately, I think it will all come down to sort of whether those tariffs, to your point, apply across the board, whether they are more discriminatory vis-à-vis specific type of countries and products, and again, what will be the response that either the EU 27 or the UK will want to have, either independently or also in consultation with one another.
Well, the auto market is already facing its own challenges, isn't it? And that's having a broad impact in Germany. Is that one sector that's particularly vulnerable then? What are the sectors most vulnerable at this point?
In terms of retaliatory list of products, no one knows at this stage. But to your point, I think we have seen unilateral action, including taken by the EU very recently on electric vehicles coming from China that we understand has had some impact on European exporters. So potentially, yes, I mean, those could be the target. Again, I think it is quite early to make any sort of strong statement at this stage. What we do know is in the context of the new administration, we will see potentially more unilateralism, trade measures being imposed, and potentially that could lead to more transactional decision being adopted with bilateral trading partners. But again, I think it will depend as to whether there is any potential negotiated outcome that could lead to that.
The UK runs a deficit with the US, a trade deficit with the US. Does that make us less vulnerable?
I mean, listen, it depends. The UK now, this is a smaller market than what it was in the context of the previous trade administration, because at that point in time, the UK was still a member of the EU. So whatever the EU was deciding in terms of responding to those unilateral trade measures was adopted into UK law.
Do we benefit by being outside of the EU?
Potentially, yes, because we could have much more independent sort of trade action and potentially negotiate a non-separate trade agreement. However, I think it is very early stages, so everything is still on the table.
When it comes to China, the ability for Europe to navigate a China that is focused and facing additional tariffs from the US, we need those supplies, particularly when it comes to the renewable energy shift. How does Europe contend with a highly tariffed China?
I think really that's the key question, and whether what we will see coming out of the next sort of, trade administration will really be focused on also asking the EU 27 and the UK as key trading partners to be more vocal on China. Over the past recent weeks and months, under the Biden administration, we have seen an increase in trade measures on export control, sanctions adopted against China, and the EU and the UK have been very measured in responding to that. So I think
does Europe need to make a break, though, and actually pursue stronger ties with China?
This is really not for me to say as a trade lawyer, but we would expect that to your point, I think that China will be the big focus of the next administration. And I think the EU and the UK will also have to look at whether they want to respond to those as well.
OK, fascinating. Really important context and analysis. Aline Doussin, thank you very much indeed for joining us in the studio. Partner at law firm Hogan Lovells on the potential impact of some of these proposed tariffs on global trade. Now, some other stories making news this Monday. The UK's hospitality sector is warning that a planned tax hike could force businesses to, quote, drastically cut jobs and put some at risk of closing down. In the latest in a string of warnings against budget plans from Chancellor Rachel Reeves, bosses say the tax and minimum wage increases could cost the sector more than £3.4 billion a year. The Daily Mail says staff at one of Burberry's London stores have reportedly been told about a potential takeover by Italian brand Moncler. The newspaper says the trench coat maker has paused discussions with affiliates until it has confirmed more details of the bid. Burberry has been trying to turn around its business after years of falling sales. Both companies declined to comment. The US Department of Commerce is reported to have sent a letter to TSMC to stop shipments of some advanced AI chips to China from today. According to Reuters, the instructions restricts shipments of some 7-nanometer chips used in AI operations. Nikkei also reported last week that TSMC, the foundry of course, has told multiple Chinese customers it will suspend production of their AI and high-performance chips. Coming up, German remote driving startup Vey is set to accelerate operations in Europe. We're going to be speaking with the company's CEO. That is next. This is Bloomberg.
We need to finish the job. We want to have confidence that inflation is going to go all the way back down to our 2% target.
Minneapolis Fed President Neil Kashkari talking about the outlook for inflation on CBS's Face the Nation. And we are expecting far more Fed speak as well this week, which could give us a guide as to the thinking around the FOMC, the Fed, and of course, and the impact of that incoming Trump administration. Let's get a gauge right now, bring up a terminal chart of US inflation and what that tells us about the direction of travel for this Federal Reserve. It's a big week in terms of data as well. So we'll be hearing from FOMC speakers, but we'll also be getting inflation on Wednesday and Thursday out of the US, CPI and PPI as well. And this terminal chart reminds you that services is still really the driver of that remaining inflation story in the US because goods prices have come down. The question, of course, pushing into 2025 is to what extent proposed tariffs from that incoming Trump administration would prove inflationary and put a floor under some of these prices. So the outlook right now is, of course, muddier and murkier on the back of that as yet unresolved question. But a reminder of the role that services is playing and the relative stickiness there as markets start to fade out some of those cuts that had been expected from the Federal Reserve. Let's stay with the Trump impact on these markets and flip the terminal to Bitcoin, which again is at these fresh record highs. It crossed 81,000. It's currently up 1% in the session. A reminder of what incoming President Trump has promised around this space. Pro-crypto stance, promises to support in terms of regulation, also promising to put the US at the center of the digital asset industry globally, and has also talked about a US stockpile, a potential stockpile of Bitcoin. So further upside coming through from that largest cryptocurrency by market cap, again, very firmly linked to the Trump trade. Let's get back to the China story as well, because that has unfolded for us with more stimulus, or at least more support coming through. This is about making the debt pile of local governments more manageable. But the top line is that many investors have been disappointed that there hasn't been more to support the consumer. $1.4 trillion program, 10 trillion yuan, about 1.4 trillion US dollars. That's the translation. Again, to help governments with those debt loads. And what we're expecting as well, the finance minister saying that there will be more forceful fiscal support next year. Interestingly, UBS coming out and downgrading its outlook for growth in China next year to about 4% and saying it will be far lower in 2026 as well, again, as a result of the Trump risk. Let's flip the terminal and have a look at what this is all doing for foreign investment into the Chinese market. And you have just seen that plummet. The likes of Nissan, VW, IBM, all cutting their investments in China. Part of that, of course, down to the slowing economy, the challenges, and the geopolitics as well, certainly in play. And you could expect that geopolitical situation to become ever more complicated to navigate, of course, in the months and years ahead with the new US administration. Just some numbers here. Foreign firms have pulled more than $8 billion US dollars from China in the third quarter. It has slumped in the past 3 years, as you can see from that chart. The decline of almost $13 billion US dollars in FDI in the first 9 months of this year. Right, coming up, German remote driving startup WAPO is set to accelerate operations in Europe. We're going to speak to the company's CEO. That is next. This is Bloomberg. Welcome back. Now, remote driving startup WAPO has secured a €34 million loan from the European Investment Bank to help develop its tele-driving technology and expand its operations in Europe. The Berlin-based company launched its first commercial service at the start of this year, which allows tele-drivers to remotely operate customers' cars. Joining me now from the German capital is WAPO CEO Thomas von der Ohe. Thomas, thanks for joining us. Talk us through the time frame then around a commercial project and product in the European market. You've got exposure to Vegas. You're running cars there. What about in Europe? What are the regulatory hurdles?
Yeah, good morning. Very nice to be here on the show. Yeah, we had a very exciting year coming towards, now the funding of the European Investment Bank of 34 million. And being live in Vegas now also, gave us the chance to secure additional funding on the one side to develop and continue to develop our world-leading remote driving tech here out of this continent, as well as then using the funds to actually launch here now in Europe. We got now some additional capital. We are, we became the first and are still the only company in entire Europe to drive without safety driver on public streets in Hamburg. We did that actually last year. And now with the additional funds, we can now also focus more and more on our eyes on Europe to, hopefully launch our service, our unique service also here on the European continent in the upcoming months.
Yeah. So Thomas, just let me push you on the time frame a bit. The commercial launch, is that reasonable to expect in Europe in 2025?
Yes, we love to continue to push forward our efforts here. Obviously, there's some more dependencies here in Europe compared to the US when it comes to regulatory approval together, with the city and state officials. But I feel very confident that, with their support and, our push, we can do that in 2025.
Do you feel like you're getting the support you need, Thomas? Because we look at the travails of German industry right now, and there you are, you're developing innovation, you're developing technology. Companies like yours arguably should be the ones getting more support from the German government.
Yeah, I have to say, when I always talk here to regulatory bodies here in Germany, but also in Europe, I feel everyone really wants to push innovation forward and bring this very new, sustainable mobility solution into the public hands. But it just takes some time to get through the system, and many people have to, agree. And I really do think that we get the support. It's just that the system works a bit differently here in Europe compared to the US, where it's more straightforward to get regulatory approvals. So I do definitely see that support. It just takes a little bit of more time, and it's basically step by step.
Musk has talked about the robotaxi possibly being in production before 2027. To what extent is Musk and the robotaxi, Tesla's robotaxi, a threat to your business?
So the technology that we've developed is remote driving technology. You saw some of that in the clip where a teledriver remotely drives a car. Now, what do we do with this technology? We launched a completely new service in Las Vegas that we also now want to launch here in Europe. It works like that. You download the WAPO app, then you click a button on the WAPO app. A electric car comes to you, remotely driven with absolutely no person inside, and then the customer drives him or herself, right? So this is where it becomes kind of car sharing / car rental. And then when the customer is done, they're at the airport or in front of their office, they don't have to park the car because then another remote driver comes and parks the car for you. So basically this creates by far the most affordable door-to-door transport, right? Half the price of ride-hailing. And it also creates a very sustainable mobility service. And when we compare that against robotaxis, you mentioned Elon Musk approach, also Waymo and Zook's approach. They are building the next generation ride-hailing, right? So you think about, okay, what we have today with taxis, Ubers, Lyfts, and so forth. Robotaxis is kind of the next generation. What we are creating is the next generation car rental or the next generation car sharing with very different properties. In particular, being very affordable, half the price compared to ride-hailing, but in particular also because you drive yourself, right? And that has additional benefits, not only a price benefit, but also you're, very flexible and free to go from A to B. You don't share the physical space with often a male driver. And it's a different mobility category, so not in competition with robotaxis.
Yeah. Well, you say you're not in competition with robotaxis. I wonder, do you think that, do you worry that Trump maybe has an unfair, or Musk, I should say, has an unfair advantage now that he is so close to the incoming Trump administration?
I don't, as I mentioned, I really see that kind of autonomous driving, the approach that Elon Musk is pursuing, but also other companies, and remote driving has really, really big benefits, right? In fact, we are discussing, with various autonomous driving, leading autonomous driving company, how can we help them accelerate their launch even, right? So think about that it's not really in competition, it is actually synergies. So we see that autonomous driving can be rolled out in certain areas, like, for example, highways, going straight, low-speed maneuvers that could be done, in the next 5 to 10 years by an autonomous machine. And then the other parts, the unprotected turns, or here, downtown Berlin or downtown London, downtown San Francisco, the more difficult maneuvers can still be done by remote drivers. So really, we see a future where humans and machines work together and can, accelerate the rollout of autonomous driving. And that's why I don't see, a big threat on, or like a competition with autonomous driving companies.
What is the potential market value of this new segment that you're building out?
Yeah, so we are going after this new mobility category that we call driverless car sharing. If you look into mobility patterns, they're very driven by price. We believe by lowering the price point to about half the price of the next best alternative, we can massively increase the demand of people wanting to get from A to B at affordable prices in a sustainable way. So we believe this could be much, much bigger than ride-hailing, and not because we're taking away, like trips from ride-hailing, but much, much more generating demand for, more price-sensitive people going, for example, to work, right? So commuting is a big question mark that's just very not possible for many people because of affordability and high prices. Yeah. By lowering the price, we believe we can increase the demand.
Okay, very, very briefly, the impact of the German politics on your business, just very briefly.
The impact of the politics, I think there is a big push in remote driving lawmaking here actually in Germany and Europe, and we really hope to see that continue over the next weeks and months to actually make remote driving an official form of technology that is allowed on public streets at scale, which we see is coming over the next months and hopefully continue to come even if there's changes.
We appreciate your time. Thank you very much indeed. The WAPO CEO, Thomas von der Ohe. The opening trade is up next. This is Bloomberg.